Felix here. Remember the massive short squeeze at the beginning of this year? Well, we're set up for one of these again on the following date. I'll explain it to you in the next 3 minutes, so stick around. None of the following, of course, is financial advice. I always come to you in conclusions. That's why I show you all the facts and the figures and where I get it all from. This is from Goldman Sachs sentiment indicator, and it is at a light positioning. This is pretty light. 1.0 is a pretty low score. Okay, not super low in terms of like all-time low, but still very, very low. So that is therefore possible to be unwound and give us a short squeeze. And there is one day for that. JP Morgan also saying, high short interest basket continue to garner interest with several hard to borrow names reaching an all-time high. So things like Mara, MSTR, and lots of rubbish like that. We're seeing a 6-week period of persistent shorts added to the end, but have been consistently covering in 2023. That was that short squeeze we already got. So when is it all about to happen? Well, okay, the market is positioned from an options point of view. This is the SPY. We basically are sitting between 385 and 400, 410, thereabouts. That's essentially the range where we have resistance on the downside, support on the downside and resistance on the way up. And that looks like kind of the way it is. And I would say without the short information, I would say we're probably trending down a little bit here, bar some unusual event. Now, what's that unusual event? Well, there's 2 things coming into it, well, possibly 3 things coming into it. And I'll tell you which one's the most important from my perspective. We're getting GDP growth rate for the 4th quarter on Thursday. We're getting the jobless claims as, every Thursday. That's definitely a biggie. Watch out for that one. And then we're getting even more important. We're getting PCE price index, the Fed's favorite inflation measure. Watch out for the core one in particular. That's being expected to be sort of around the 0.2 mark. If that comes in much lower, that's going to give us that shot in the arm of adrenaline and all sorts, and will very likely give us another short squeeze. So this will be Friday, and this would literally be a repeat of Friday 2 weeks ago. So watch out for that. Also, tons of big earnings this week, Microsoft and so on. So watch out for those. They have less of an impact than this year, but definitely something to bear in mind. And if you look at inflation, this is CPI, not PCE, but we are coming down quite a lot. Historically, still obviously at pretty elevated levels, but sort of 1970s, 80s kind of levels. But we are coming down a lot. So the trend here is really what people are going to be looking at, is like, how much lower are we going? Are we going to go lower than expected? So while I'm slightly bearish on the market, I'm very aware of what's happening on Friday, and I will definitely position myself accordingly and readjust risk exposure on the Thursday while we make lots of money, hopefully, on earnings trades. You can also join me for this completely free masterclass next Saturday. I think this could literally change the way you invest and trade forever. I will teach you how big banks, how Wall Street tweaks every single trade and every single investment to reduce their risk by 90%. And what does it cost them? Nothing. So come and join me. It'll be live from Cannes here in France at felixfriends.org/secret. It's on the 28th. And I think it's something like 11 a.m. Eastern time. Anyway, if you go to felixfriends.org/secret, it'll give you the time and the time zone, exactly where you are. So sign up for that before spots run out, and I promise you that they will. I genuinely appreciate you tuning in and watching. Let me know what you think about market direction this week. Are you feeling bullish? Do you think the inflation story is basically gone and the market is going to go higher? Or do you think we're just getting a bit of false information here and earnings are going to come in so bleakly that the 18 times PE that you have to pay for an S&P stock at the moment seems a little overvalued? Love to get your view on that. And thank you very much for tuning in. See you on the next one.